Hold on real quick. You said check out what?
NAS 100.
Oh, what I'm doing? Just type on here.
Not NA.
Oh, they said NES like Nintendo.
The Nintendo is NI.
Nah, Nintendo like NES, like this, like
Oh,
the system. So I mean, for you guys who first time on my class, I trade harmonics, but I have a strong emphasis on the basics of forex because without the basics, you can't trade harmonics, and vice versa. Um, but yeah, this NAS 100, I know nothing about this, right? I don't even know if harmonic patterns work on the same way on these as they do on US 30 and stuff like that. Let me look at this US 30 real quick. Like this thing is just gapping, doing what it want to do.
bro, whoever caught that drop, bro, God bless their soul.
Serious bag. I don't even know how to calculate pips on this jump, man. Like I don't mess with this at all. Okay, this says 451 in other people terms. I don't know what that means on US 30 because I don't trade it.
I think that's like 4,000.
No, well that would make sense because if somebody caught that, even if they had a 1 cent lot size, they made off. That's wild. But like I was saying though, for you guys whose first time it is on my session, I trade most of the major pairs. I started off only trading 3, started adding more and more. I did the same thing with my patterns. I started off only trading the Gartley, and now I trade the Gartley, Bat, and Cipher. Now I'm looking for another pattern to incorporate. It's probably gonna end up being the shark or one of them joints, shark or butterfly, something. I'm gonna incorporate something else inside it. But as of now, I stick to my Gartley heavily, the Gartley, the Bat, and the Cipher. Because in all actuality, all you need is like one pattern to make money, man. People think you need like all of them, but you don't. Oh yeah, I was in UJ too for this little quick sell when it hit right there. I'm already out already, so I got my 20 pips and I rolled out. And if it keeps going down, that's fine. I don't even care. I did a little scalp trade on that, and that's cool with me.
Standard lot, catch $200, 200, make 200 real quick.
Exactly. I ain't go standard lot yet. I need to though. I'm not keep talking about it. I'm gonna go standard lot. I'm going to scalp something out, standard lot it, and not even try to hold it for 100 pips. Just hold it for like 20 or 25. But I'm just going to fly through these charts real quick. All these markups that I did yesterday. Every markup you see that's in yellow, I did these literally last night. I was supposed to do my class last night, but that didn't happen. This pattern is invalidated, but it's still following structure. So my pattern up there, this one was too perfect. Did you get on this, Ray?
Man, I saw that on Sunday, bro.
You saw when I dropped this in the group chat when price was still like right here. It was only 10 pips up. Now this bad boy went for 90.
And I wish I would have called it. I saw it when we over the weekend. I was kind of mad at myself because I wasn't on the charts like that on the weekend.
Me either. I mean, I only come on the charts on Sundays to see what's been going on. I don't back test the market and stuff on Sundays that some people do. I mean, on Saturdays that some people do. I let it ride. I'm chilling on Saturday because the market will open to Sunday anyway. The same moves that happen on Friday will happen on Sunday. Except it's going to be a gap or it's going to not be a gap. This pattern right here, I actually dropped this. Was this yesterday? I don't know if it was yesterday or not, but I dropped this pattern also when it was way up here, and this bad boy is definitely moving in the right direction. It is, ooh, that's a chunk. That's a chunk of pips right there. And you guys see where the target is for entry at a daily level right there. But I will come back to this in a second. I'm just like scanning through my charts right now to see what I got. And this looks like it might be doing a break and retest. If it retests this and push back down, we should be real good for this entry down here of this pattern. Let me see what else I got. Yeah, that joint right there was dead. And for you guys who don't know much about patterns, well, I'll say guys and girls who don't know much about patterns work really well. Like they work really well, and no strategy is 100%. That's including harmonic patterns. No strategy is 100%. But what it does do is it helps you set up like pairs for the future or moves for the future. Like this one right here this bat pattern literally went to the pip and took that big drop right there. And this is all today. Let me see what we got on this rainbow pattern right here. I know exactly what this is. Yeah, that's still good. AUD CAD, we just saw this one. This, I was just in Chef JPY just for a scalp. I already closed it out, but I'm pretty sure it's probably going to drop all the way down here. If I close it out, so I was just scalping this real quick. Now, if you guys are wondering how you can get in a trade like this without having to like be super markups, because like I said, I do trade harmonics. You see I have patterns all over this bad boy. But when you learn the basics of forex, you can catch moves like this based off the strength of price action. Now you see I have this big black line right here. This is actually a daily diagonal trend line. Let me zoom all the way out. See where this starts at. This big trend line. It goes all the way across here. You see it? All the way across there. I might have drew this on the weekly, but it doesn't matter. You see all these taps on this diagonal trend line, and look how far back that goes and then comes into play all the way up here recently. And so when I saw price was under a level I have right here, this red line, under this level and under this daily trend line, and it's wicking like crazy, like it doesn't want to be there. There's a zone where you see wicks at. You have support right here on the left, and it became resistance right here on the right. I saw that as a good opportunity to scalp this real quick, just off the strength of it's under a diagonal trend line, it's under a level of support, and then it's wicking real hard in that support. Like price was wicking real hard before on that support and became resistance. So you see that right there? That's why I hopped in this trade. And then I saw that there was some JPY news coming up, and it's a JPY pair. And so I figured, you know, JPY news is going to do one or two things, but how it's setting up, it's like it's going to be a push down, and that's what it was. It's not a major push down because I'm pretty sure that folder was, where's it at? It's just a yellow folder, so it's nothing major, but it still did enough movements. You see it turn red. There was enough movements on there to get some scalp action on the JPY pairs. But I'm going to take this to my other charts. I'm going to do like I usually do. I am going to show you guys some all the way from marking the chart up to why these zones are sort of important and play such a big role. I can't talk tonight, my bad. But yeah, I got y'all. Let me see. Last time, what pair did I go over? I went over, was it NZD CAD last time? Let me look. Where's my NZD CAD at? Yeah, I went over all this last time. And look how perfect that happened. But I'm gonna take the same concept of all this support resistance. If you missed my class last time, you're gonna see all of this because the class on Thursday I did not record, so you guys missed all that goodness, and there's 1,000 arrows on here, which made sense at the time when I was doing it, but you guys looking at this now, I was like, it's just arrows everywhere. Don't matter. I'm gonna go to let me see what pair I want to do. I have a few written down from last time. I can just do the same pairs. Oh yeah, there's lines everywhere here. I should cover this one. I will cover this one, matter of fact. This is gold, and you see I have crap all over my chart. Don't worry about that. I'm going to erase all this right now. This is my older chart. This is my current chart. It still lines in it too, but this one is more cleaner. So I am going to erase all of this. Trash can. Bam. This is gold. Now, when I first started trading, I did not trade gold because I got destroyed in gold when I first started. I didn't know about pips. I didn't know how pips moved. All I knew is that I was supposed to get pips. And so what I did was I came on gold like, oh, gold moves like regular pairs. Nope. What ended up happening was I'm thinking I'm losing like 10 pips. This bad boy going like 100 on me. So I'm just like getting haymaker left and right, getting punched by gold. I'm like, man, I'm not trading gold no more. The reason why I trade gold right now is I would say probably because of Ray. Because Ray be like, man, gold doing this, gold doing that. I'm like, let me see what he's talking about. So I did, and I've been trading gold since then. So I found that gold, it respects structure so much, and it respects these harmonic patterns like heavily. And so you guys know when you come in a naked chart, this is all you're gonna see. Some hills, some valleys, some mountains, some peaks, all that goodness there, goodness and gracious. Now looking at this, what we all do and should be doing is coming on here and marking up our levels of support and resistance. And again, I know some people don't care about having lines all over the chart. But if you're trading a time frame that is a daily, 4 hour, and sometimes a 15-minute or a 1 hour, you need these levels to help you. I know having a naked chart sounds sexy and might look sexy, and they're like, hey, I have no indicators, I have no lines on my chart, and I'm catching these moves. None of that matters. As long as you can read it, you're good. So what I'm going to do is I start off by finding levels, and I always cover this on every class that I do, just to get it ingrained in the system for the people who are new. Like, these levels are very important when it comes to trading. Like, even if you're going to be scalping, if you're going to be doing like a long trade, swing trade, these levels are super important. They basically show you what price is doing and what price has been doing it at. So what I'm going to do is, how I start off is I go on my daily chart and I grab a horizontal line, make it black, make sure it's not too thick, and I am going to show you guys an example. I start by doing my support and my resistance for all my key levels. You guys see this is a pretty key zone right here, all the way across. This is even where price is at right now. But first thing I do is drop a line, level of support, bam. Now this line probably can be here or here, but I'm putting it here just because it's in the middle of the zone. I'm just looking for wicks right now. I'm not looking for bodies of candles. I'm looking for wicks, places where price doesn't want to be. And you see price has been tapping this line over and over and over. Right here, making support. Right here, it was resistance. So that happens over and over on these charts. And especially when you have your levels on point, you will see that happens a lot. So all I'm doing is going through and finding all these levels, well, not all of them, finding most of the key levels on these time frames. And you can see this level right here is pretty key because price is actually right there right now, or was there earlier, because there's a long wick on it. So you saw that when price got to that point, it tapped in and turned around. Now, if you weren't trading gold in the past, or you didn't pull up to this daily time frame, you wouldn't know that level right there is even right there. So if you know that level is right there, you're not gonna know why price is this high. Just by only seeing this, you don't know that price was that high before. You have to look at the bigger picture with this. And that's one thing that can mess some people up as traders too, not looking at the bigger picture of what price has been doing or has done in the past, like just going by what they see now. Because the past will definitely tell you the future. Same thing right here. A nice level of resistance straight across right here. You see it, price is playing under. Price is trying to push up to that level and kept rejecting it. And when it finally broke it, it took off. Remember, these lines are not straight lines. These lines are more of zones. Price likes to play in zones than it does just like a straight line. And honestly, some of these lines are going to be to the pip. As you saw some of those patterns I have, the entry was to the pip. But a lot of time, the entry to the pip is more of for a zone setup. And you start drinking more water before I come on these classes, and my throat be dry. Like right now, I went to the gym. I did my 11,000 steps for the day. Then drunk half a gallon of water, well, almost a whole gallon of water. My throat is still dry right now. Oh, I didn't mean to do that at all. And I still made 2 zones, but I definitely did not mean to do that. What we're doing is, when you're finding your level of support and resistance and your key levels, make sure that you are getting at least 2 touches. But I look for more touches, but 2 touches they've validated. But when you have a good zone, you'll see like 1, 2, 3, 4, 5, 6, 7, 8. There's like 20 touches on this one line right here. So I do that on my daily. I'm not going to do every single one of them on here. I'm just going to do the key ones. Then I'm going to go down to I'm not even worried about all this down here. Now, if price comes all the way down here, like in recent time, something's wrong with gold. Look how low that was. This was 2005, well, 2004 when price was down here. I'm not saying price won't go down there. Where you walked, I'll be walking tomorrow. I'm jogging. I'm doing 5Ks next year, man. I'm doing 5Ks. It might not sound like much to some people, but you know, when you're 6'7", weigh 327 pounds, doing the 5K, that's a lot of running. That is a lot of running. I'm doing 5Ks next year, so I'm starting already. Now, I'm gonna show you guys diagonal trend lines too, but before I do that, I'm gonna go down to my 4-hour time frame, and I'm doing the same thing on the next one. I'm gonna make these lines gold to differentiate between the daily and the 4-hour. Make this gold, Make this dashed. Why not, Ray? You don't like running, man? Run like the wind, bruh. Run like the wind. So you see key levels again. 1, 2, 3, 4, 5, 6. Just multiple touches on this zone right here. Ain't nothing wrong with 5Ks, man. You know, we can do a 5K to 5K, a 5K to P5K. So we can do. I'm doing the same thing again. I take that as a no, Ray. Where's the support at, man? Where is the support? This level right here is a little more of the same. You see the touches, 1, 2, 3, 4, 5. A good indicator for finding these lines and finding these zones is when you see something like this happen. I gotta fix this error real quick because this bad boy is wonky. Don't need that part. I'll make this blue. So you see, when you see something like this, when you see price push up and then like just stop and then go up and then come down here and stop, that's a good indicator. It's a good level right there. Like even if you didn't see it at first, if you see price just stop in the middle of a drop, that's usually a pretty good level. Ooh, look at that wick on that. Was that December wick? What was this? Oh, this is in November. Oh, this is when that crazy spike happened last year. I remember that. No, this wasn't from last year. This is from 2014. I'm thinking about the one that happened all the way over here on all those pairs where price just dropped off crazy. I want to say that happened to all the JPY pairs. Price dropped like 300 pips in like one day. When the heck was this on gold? 2014. That's crazy. That's probably losing people's account right there. You know, some people don't be using no risk management. We're all guilty of that. That's crazy. You see that though? See that wick, man? Like at this point, I don't think price of gold hasn't been that high in a while. It just went crazy. I don't know what that was. That's crazy. I wasn't even trading that long to even know what that was. That's 2014. That's before my trading time. Where's the rest of my chart at? Oh, that's the end of it. Okay, so I'm going back this way. Final levels still. It's one of them setup moves. We're like, you know what? I'm about to sell this, and this thing said, nope, ain't nobody selling. Well, I mean, you could be, but just know some accounts probably got wiped out from that, or somebody made bank. I don't know how to predict that move, but man, it's a long wick. I think it says that's 2,700 pip wick. How does that happen? So if you guys have any questions too, if you guys have any questions too about how I'm placing my levels and why I'm placing my levels in a certain spot, definitely you can just drop in the chat because I know I'm just talking my behind off right now whilst I'm doing this. And this one right here actually was an accident, but there's a level right there. I want to erase that for right now. I talked to, let me see if she's on here. Nah, she ain't on here. So I talked to Jaleesa yesterday, who also trades and who's also from my area. And she was saying that one of their struggles was getting like a certain amount of pips that they want. And one thing that when you first start trading, might see people posting about they got a 100 pip move, or they got a 300 pip move, or they got a 400 pip move, or even they got a 60 pip move. One thing you don't want to worry about too much is getting hundreds of pips at one time. I mean, that comes with it. Like before, I've talked about people trying to put the money before the education. The education comes before the money. If you're worrying about, I need to get 100 pips because I need $1,000 today. I need this 100 pips. You can get 100 pips on one trade. You can get 100 pips on a 20 pip trade with 5 entries. But if you can't get 20 pips, you're not gonna get that 100 pips. So that's one of the key things is making sure that you can at least like knock these basics out first before you're worrying about, I'm trying to get these giant chunk moves. Worry about getting 20 pips first. Like get what you can get first, and then the rest will come with it. Like take those baby steps. I know everybody thinks they want to come in here and be master trader off the rip. It does not happen that way. at all. I mean, I wish it did. I wish trading was as easy as we all think it should be. But I mean, if it was, everybody would be doing it. So now I'm doing the same thing on my 1 hour time frame. Came down here, finding my key levels on my 1 hour, and dropping a green trend line to represent the 1 hour time frame. And same thing, looking for area where price has just been tapping and going. You see all those touches to that. Again, 2 touches validated, but I like to have like 8 touches on there. Can you explain time frames? If a trade says 15-minute, doesn't mean it's a short trade. For the most part, yes. Like, that's as simple as it is. And if a trade says 15 minutes, that means simply that it's drawn on a 15-minute time frame. I mean, on a 15-minute chart. So like, see right here, it says what the time frames are at. I can't get 1 second on here because I don't have an advanced enough trading view. Yeah, you see that? But you go down to like the 1 minute. Some people trade the 1 minute. I don't, because that means at that point, every single one of these candles is a minute. So that means it's going to be moving fast. And if you're sitting here watching this, you must be scalp god. Which, I mean, I'm guessing you can do this. I mean, people do trade the 1 minute. I don't trade anything less than a 15-minute. I don't even look at anything under a 15-minute. Because if you're sitting there watching, it's going to be moving nonstop. It's so much information to take in that half the time you don't need all the information. Unless you're like scalping for like 5 to 10 pips, you don't need to be down in a 1 minute or 5 minute. I don't go any lower than 15-minute. And I don't go any higher than the daily. If I look at the weekly, it's just to look at it to see what price has done in the past. But for the most part, the weekly is going to show you so much information. For instance, now on a weekly, every single one of these candles is a week. Yeah. If you see a pattern or a trade drop on the 15-minute, it's closer to being like right now. It's probably going to happen sooner than you seeing a pattern drop on the 4 hour or drop on a 1 hour. Now, I'm not saying it's always going to be faster, but it can be faster. It depends on what pair it is, because some pairs move faster than others. But look at this on a weekly. Now, on the weekly, every single one of these candles is a week. Now, you can come on here and you can draw a pattern, a harmonic pattern, or do a trade setup on a weekly. But just know that this pattern is going to take you months to complete, or this trade might take you months to complete. So if you're going to be in it for the long haul and sitting there holding, let's say you want price to get back down here, that is 5,000 plus pips. You know how long it's going to take you to get down there? That's a long time to get back down there. That says 511 days. That is almost 2 years it's going to take to get back down there. So I mean, that's why I don't do anything higher than a daily. So I'm gonna go back down this 1 hour real quick and yeah. Okay, so you're back in the 1 hour. Now I'm not gonna do every single level, every single line on here, which I mean I could, but it would look ridiculous. You don't need everything, you just need key levels. And you see what makes this level right here key is look how price respected that level right there. Price. Why is this back to this arrow for? Why did you do that for? Let me get off there. 2 years later, what's up? Yeah, exactly. We see how price came and respecting that same level. And then when it broke, it came back to that same level again. That's what makes this level right here key on a 1 hour. So, I mean, we were looking for key levels, not every single level. When you see price do a nice support and resistance, and you guys remember what that is, this is support when price is on top of it, and it's resistance when price is below it. Price is below it trying to break through. That's your resistance. Your support is when price is on top trying to break down. That's your support. So let me, I know I just kind of glossed over that, but I don't know how many of you guys were on it last time to even know. And I don't want to like keep repeating the same things over and over. And some guys are like, hey, I didn't heard this. I'm trying to see what to do. I'm trying to see how these moves working. You know, I don't want to keep repeating that. But I mean, you know, if you guys want me to get into that and dabble, I definitely can. But as of now, I'm just going to gloss over that bad boy right now. And I actually did not record my last session. And I went through all that stuff. So I'm trying to find myself recording these sessions more so that you guys can have the information to go back and reference. But yeah, that's most of the 1 hours I'm going to draw in here before I start getting into like the diagonal trend lines and stuff. That's a wonky level, but you see that there's 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 touches on this same level right here. And yes, it's going to the middle of some bodies, but you know, every one of these horizontal trend lines you draw is going to be going through some body of some candle. but you're looking for it to be tapping on wicks though. Now I know you guys saw before I erased this chart, I had diagonal trend lines everywhere on here. So one thing I found, I know there is a strategy that uses diagonal trend lines, strictly how I was drawing them. I don't know that strategy, but I'm practicing with how they move. And I'm gonna show you guys how we do this. So what we do for diagonal trend lines, you're literally just looking for, one of your giveaways is looking for a higher high and a higher low. Now, if you don't know what that is, I'm about to explain it for you. A higher high is when price does, let's say for instance, so price had this low point right here. This was the low point in this general area. We're ignoring this right to the left. This was the general area low point right here. Now, your higher low is right here. This was your previous low. Now your low is higher. And what makes this your low is that, you see when price peaked up and dipped down, this is your new low. It found a new level of support. This is your new low. This is your previous low. This is your higher low. I'll make this a little bit smaller. This is your higher low right here. And this is your original low. And then again, same thing right here. This is your higher low and your higher low. And you had this whole time up here, you had a higher high. This is now your high. Oops, I not mean copy both of those. But you see right here, this is your high now, that peak. I'll make this blue, as I always do. That's your high. Then your next high is higher than that. And your next high is higher than that. Now you see price kind of made an M formation, and then it kind of made a lower low. What the next move was, well, you got a higher high and a higher low. So even in all these moves, sometimes you'll get like a little dip like this, but for the most part, when you see price climbing like this, it's making higher highs, higher lows. And when you're doing that, I use those higher highs and higher lows, or lower lows and lower highs to draw my trend lines. That's kind of a giveaway. And you see price like kind of mountain climbing or stair stepping up. A lot of times it's just stair stepping through zone to zone, because what price is doing is breaking a level and finding support on it, breaking a level, finding support on it. Remember, support is when price is on top, resistance is when price is below. So when you see price like stair step its way up like here, you see what it's doing. It's, when does arrow gonna be jacked up again? Let's see. How dare you be jacked up again? You see price, let me make this purple. You see price break this level. It broke this level right here, this daily level. Price broke this, and then it came down, retested it. That made the newer higher low. Then it broke this next level, this 4-hour level right here, and it came down and retested it. That's your new higher low again. It made a little dip, but this low right here is still higher than this low, than this major level low. And so when price came up again, did the same thing. It broke a level, retested it. It came down, retested the same level. And this is another key level. This is the 4-hour level. Remember, these 4-hour and daily levels will be respected more than a 1-hour level is. So you see this green line is a 1-hour level. Price tapped it and went, and then came and smashed straight through it, and then came back up and smashed straight past it again. It acted like the level wasn't even there. But that 4-hour level though, when price came down there, it came to it, respected it, smashed through that 1-hour level again, and went to a 4-hour level. So you see, like, I'm not gonna say that these 1-hour levels don't exist, but they get trumped by the daily and 4-hour. So looking at this is why I don't even worry about the 5-minute and 1-minute chart. Because now imagine yourself going down there and drawing patterns on a 1-minute chart, or drawing a level on 1-minute chart. You won't know what it's going to get respected, because it's just it's gonna be so many levels on there. And when you see price turn around at a daily or a 4-hour, just know that level is going to hold some weight. But when you see price turn around at a 5-minute, that's probably going to be like, hold not much weight. And that move is going to go for like a few pips, not as much pips as you think. How do you know that was a 1-hour level? Because it's green. That's why I color coordinated it for. That's one of the plus sides of doing it color coordinated. Because in the past, before we had like a system of how we do this, I had freaking rainbow chart. I can show you guys. I always have this open on here just so I can show people how ugly my charts were. Let me go back. What is this? May. And then you might see some patterns on here that weren't respected anymore. I have diagonal trend lines on this one. What is this, gold? Hey, yeah, I'm gonna get to that right now. But let me see what I have. You see if I even have one on here. There you go, on EJ. Now I have levels on this all over this. Yeah, I see no point in labeling them because they're colored. By me knowing that they're colored, that's all. That's I already know exactly what it is when I see it. It makes life way easier by just having like, hey, green means 1 hour, gold means 4 hour, black means daily. Now look at this. This is one of my old charts. This is before I was like color coordinating everything. These charts, yes, they make sense, but you see that I have levels everywhere in here. I don't know what time frame these levels were drawn on. I don't know what level they were, like what these levels represent. It's just like lines everywhere. Lines, lines, lines. Too much information on this chart and too much information that's not cohesive. Yes, it's like yellow and blue and red and stuff. That's the main colors on here, but it's so much I needed it to make sense. So by doing certain color for a certain level, even when I do my diagonal trend lines and my charts, I mean, and my harmonics, it makes life way easier. So let me go back over here. Oh, daily. Yeah, so now I'm going to show you guys the diagonal, how these higher highs and higher lows help this. Let me drink some water real quick so my throat dry. I'm about to pass out over here. I got to finish this gallon before the end of the night. But so this is the basic markup. I don't have every single 1 hour level on here, but it's not important for what I'm about to show you guys with the diagonal trend lines. Now, the diagonal trend lines, I'm not gonna lie to you, the best thing to do is eyeball it and adjust. That's what I do. I eyeball it and see what I see, then I adjust it. So the same things that you do, yeah, definitely practice it because practice makes perfect. But one of the things I definitely do with this is I look for a low or a high, a point that sticks out. And if you see a nice one, I'm gonna make this thinner, and I probably can use this line right here too, but I'm not using this extended line. I like to do my regular line, then extend it. So what I'm gonna do is I can just take this line right here, and I'm gonna take this arrow off here too. So I'm like the arrow on here. But if you see, bam, that can be a trend line right there. And let me show you how and why. Even though that one there isn't the sexiest one, but I'll leave it. I'm gonna extend both sides for right now. Think of these trend lines as like, if any of you guys watch football, you know how the goal line is forever extended. So if you dive in, your body's out of bounds, but you hold the ball out, it's still a touchdown. Think about how far these lines go. In the future, these lines are gonna come back. In the past, a lot of these lines, they got tapped before too. But just look up here in this zone, like up here. I didn't mean to do that. There you go. Look at the wicks touching on that. 1, 2, 3, 4, 5, 6, 7, 8. Okay, I got 8 wicks right there, just off that right there, off this daily level. So I'm scrolling. In the future, price comes back to these same levels of these zones. It's how you know you have a good one. When price comes back and respects these. See that respects it, how that wicked that again? Wicked it, and then wicked it. Let me zoom back out. This is one example though. How you incorporate these is, I'm gonna erase this one because it's not important to what we're doing right now. It's just an example. So I do that. I go and I find another point, like this low point right here. I'll grab this low point, and I want to see. This is why I extend this for. I want to see where price came back to this at. So I can do this one right here like this. Now I have this going through the wicks. Remember, this is a daily. That's why this line is black too. This is a daily. So let me actually get this going through here a little bit. And then where's my other end of this at? And get you going through there. Like so. So my touches right there at the low, right there. Price came to respect that. Oh, not there. Right here. Price came and respected, and it rode the trend line. And in the future, where we're almost at right now, what did price do? Price came back to this trend line, and what did it do? It respected it. Like a ceiling and a floor of a trend line? Yes, exactly. But even on a diagonal, it works. I incorporate the diagonal into my patterns, and I incorporate these diagonal trend lines into my movements that I try to catch, just based off if I have a daily diagonal trend line and I see price has been riding the top of it, I know at some point when price breaks, it's going to break it hard because it's a big level. So like this trend line here is a daily. So I mean, I know when price finally does break this line, it's going to break it hard. And you saw that when it broke it, it finally broke it and it broke it hard. So like, let's say I was waiting to get in the sell in this general area, but I didn't know where to enter at. All I have is just one trend line right here. When I saw price finally clear this, I can do like a sell stop on this. That when price finally clears this, I can get in this trade for the sell instead of just like waiting and watching. Now, one of the benefits of this too, I was telling you guys earlier, is a lot of these trend lines you can just like literally copy it over. Exactly. One thing I like to do too is this is not, I don't know if this is a strategy or not, or whoever uses this, but if you have your trend lines on point and your diagonal trend lines on point, you'll see a point where I have a daily diagonal trend line right here, and I have a 1 hour trend line going across. Look what happened when these 2 points met. Almost a perfect entry. You see that long rejection off of that? Now, it's something I'm actually playing with and practicing with, but off that rejection, this went for 1,000 pips. And that happens on smaller time frames too. At those points where price converge and tap, like even up here, you see where it converged and tapped. When it rejected for 300 something pips. But remember, this is a daily diagonal trend line. And this is something I'm still working with. So I said it's not that it always happens, but it happens a lot. In no strategy, nothing always happens. But if something starts happening a lot, you gotta start paying attention to it. So if I just control and copy this over, I can bet you that this same trend line, since it's been so heavily respected, it occurs again in the future or over here. So if I drag this up here, now I just drug the same exact trend line, same angle, same everything over, and look at all the touches on this trend line. This is the same angle and everything. You see all this respect on these trend lines? Now look at that. Even up here, and like where price is at now, all that respect on that trend line. Let me I'll leave that orange. You guys see what I'm going for. I'm gonna change the color on that. But you see my point though, that when your diagonal trend lines are on point, and this is the reason why I extend them, is so when I draw them, I can see how far in the future they're gonna go, or how far in the past they went. And though I know it does look odd that there's a trend line going way down here, nothing's down here, I can turn this extension off, but it just helps with seeing where price was at. And look what happened right here, this orange circle. Well, I'll change the color of the circle to pink for a reason. Now make this pink also for a reason. Remember I was talking about that point where those diagonal trend lines and horizontal trend lines meet like this. Look at that rejection off of there. A nice rejection. It's also like the bottom of your previous level of support right here. That's where price was support at before. And this we had resistance at right here in the past. This little area of resistance, when price finally broke it, it became support. And this same area came back into play all the way from, when was this? February 2010 back to December 2015. You see how big that is? Oh, I am. It's coming. It's coming. I try to cover this stuff right here because this is the part that people always seem to forget. This part is very important in harmonics. And let me go back to my real charts real quick. I use these same levels into my harmonics. Look how I want to say Ray dropped this into his chat, but I dropped this in the other chat I'm in with Ray. I had a Gartley pattern on here. It's in a zone, a level of support right here. You see my level of support in this little pink area? Right here. It's my level of support right there. Now, price came in that area, and I had a daily diagonal level right here. You see that right there? So when price hit right there, it rejected heavily. Now, Trump started tweeting, and then when Trump started tweeting, this happened. Look at that. I can't even see what. Let me move this real quick. 572 pips later. Now, look how perfectly that lined up with my diagonal trend lines, my level of support, my harmonic, my diagonal trend line and horizontal trend line. Like all those basics come into that advanced thing. That's my point of even explaining that in the first place. To know that if you know all that stuff and you have all that evidence of what's going on, when you see a trade like this, you should have no question about getting into it. I have a pattern that's entry is right at a daily level and a level of support. I mean, no one knows that Trump's going to tweet something about China, but for the ones who did, they ran off with the bank. They literally got the whole bank. But same thing here with these patterns. You see, I have all these little patterns in here. This is somebody's on a 15-minute. I have all these little patterns in here. Let me scroll over. All these little patterns in here that I'm confident to get in because they're all playing on top of a key level right here. They're all playing on top of this level. So even if I get in this sell right here on this bat pattern and price stopped like a few pips down, that's 70 pips I caught before it even hits the breaks down here in this area. And another pattern was formed up, did the same thing. This is why I'm even showing you guys gold, because gold follows these harmonics and it follows the basics so heavily. Like even how gold is playing now on top of this level that I just drew a little while ago. You see that? Gold is playing right on top of it. So again, if you weren't in this trade, I caught a little scalp off gold too from right here. Let me drop my little arrow. I caught a little scalp on gold right there earlier because I know that, okay, this black line is a daily level. Yes, price did get up here and get high, but if I go way, let me go in the past. Let me go to the 4 hour. And let me go all the way. This is that same level right here. Look how many wicks I have on there. This was at this point, this was the highest high. Like in recent time. And this in recent time, this was last year, April. Every time price got up here, started dipping down. So by me seeing that, hold up, is that the same level? Let me make sure real quick. Get out of here. Get way back. Oh, here it is. This is actually level right here. This was the previous like level of support is where it was at. This is where we're at right here. This previous level of support. So when I saw that price got back over there, I'm like, okay, I can get in a little sell because price doesn't really want to be in that area unless price is going to blast through it and then find support. But since it didn't, me seeing that price is right there, when price tapped that line, I can get in for a sell. I know it's kind of hard to see, but if you look on the daily time frame, that's just a freaking doji. This is a long wick right there. So when I see price tap that, I can get in for a sell on that. Look how price tapped that here. Again, like I'm saying, when I see price getting in this area, I'm like, okay, I can get in for a sell. Just based off the basics, not even getting to the harmonics yet. Like I said, the harmonics are important, but for you to even get to that point, the more information you can have, the more confirmation, the more confidence you can have in your trade, the better. Let me see if I drag this one over one more time. Let's see what I got here. Same difference. You see the respective trend line. This is, again, the same angle, same exact trend line, just control copied it down, and it shows the same respect. When price comes there, it tapped and turned around. And again, look at this convergence of prices right here. What is that? That same thing. I have a horizontal trend line and diagonal trend line. They came together, and what happened? Price rejected off of it hard. Now, imagine me having that, and I have a bat pattern or a Gartley pattern or a cipher pattern, and my D point lines up perfectly with that. You know it's about to be lit because the thing about to take off. That's just my confirmations on that. So let me go back down to and again with these diagonal trend lines, you can do these diagonal you can get these diagonal trend lines on any time frame. But I'm just showing you guys on the daily. It says I use conviction zones at all. I do not. Let me erase this and this circle. If I go down to a smaller time frame, you can actually use these same trend lines in Trendline in these Trendline like rules on a lot of different things. But like I said, I use them on my Harmonics because they're so powerful. Like even right here, when price took a plummet, it came down to a trend line and turned around to a diagonal trend line that started way back like 5 years ago. Probably can go through here literally and draw diagonal everywhere. But you know, again, I don't want to make things too cluttered because that's a whole different strategy that I'm still practicing with right now. But you see how, look at the respect of that trend line right there. This is literally the same line. I move it down here. Look at the respect in that line in the middle, that wick in the middle right there, right there. Let me erase this though, because I don't need you right now. Now let me go. And did I have this one right here? Up here, let me see. This is again the same trend line being drug out and over. And look at the respect on it. Same angle. I don't know what it is with the same angle, but it's like when you find a good one and you control and copy it over, it sets you up nicely. Now, this is again the same exact trend line, and look at all these touches on it. Look at the respect and rejections on the same trend line. And this right here was the entry to my Gartley pattern. It all just plays hand in hand so nicely. Let's see how much time I have left. I got about 10 minutes, a hot 10 minutes. But so in this last 10 minutes, what I'm gonna do is I'm gonna show you this Gartley pattern and why I entered it and how I entered it. Just because you know it's right here in our face. But I'll make sure on Thursday I'm gonna go over the patterns more heavily now that I went over the diagonal trend line, the support, resistance, and horizontal trend lines and why they matter so much. Because it's always good to remember why those things matter. Remember, black trend lines matter. They matter. Yeah, foundations are extremely important. And we ain't talking about makeup. But so for instance, let me go to replay. I want to say price wasn't even here yet when I drew this up. Now you know with any harmonic pattern, any pattern at all, what you're looking for is an impulse leg. My impulse leg on this was right here. And no, I know I see this. I know I see this. But like, hey, it's a lower point right there. Don't matter. The reason why I would not include this is because the impulse move actually started after that tap, after that move and that tap. So my impulse leg is actually right here. This is my impulse move right here. Is it actually higher than this? It doesn't matter. But this is my impulse move right here. I'll make it nice and yellow. Now, anybody who's been in my class before has seen this Gartley pattern 1.5 million times, but you probably haven't seen it with the diagonal trend lines, the horizontal trend lines together like that. So what I'm doing is taking my custom color fib. I'm going from my bottom of my impulse leg to the high point, which is actually the red point. It's pretty close, but right there. So I got my impulse leg. Oh, that's huge. My impulse leg in yellow. I'll make this smaller. Man, you guys, oh, that's too small. It's a happy medium right there. Got my impulse leg in yellow. Got my retracement. Hold up. This is not what this was it? That wasn't what it was. Am I tripping? Okay, I'm not tripping. Okay, so how I do these, right? On my Gartleys, if price wicks 786 for my B, I will still take it as long as the wick isn't like all the way down here somewhere. As long as the wick isn't like this. Where are my options at? What's going on? I need you to get right. There you go. So I'm looking for. So as long as my wick isn't like all the way down here somewhere, I'm good. If price wicks like this in 786, I'm still taking this Gartley. Ness. I know some people see it touch 786, they won't even touch it. But if it wicks it, but price doesn't get a firm close on there for the time frame that I'm drawing this on, I'm taking that bad boy. Now, that's not for everybody, but that's what I do because I find that even though price wicked that 786, it's still gonna respect that as a Gartley from what I've seen. So my B should be 618. My retracement, my B, my retracement, which is right here. My retracement point. I'll make it purple. My retracement, aka B, aka B. I spelled that wrong, didn't I? Thanks, Google. No, I spelled it right. Aka B is my 618 to 786. I'm gonna say wick. Now that rule isn't for everybody. Everyone doesn't follow that rule. That's the rule that I follow. Just because I've been trading Gartley so long, that's what I do. Now my retracement, aka my B, is right here in the middle. So I got my B. How dare you do this? I got my A, which should be capital. I got my X, which is my X to my A is my initial point, my initial impulse leg, X to A. My retracement is A to B. Now, I've been doing Gartley so long, I literally can take this one fib and draw my pattern out, but I'm sure you guys the right way to do it. My next fib is going from A, from the high point of A to where B was at. To the end of this wick, I'm putting B. I'm looking for my perfect zone on my Gartley is 786 to 1, but all you need is a 618. So this is actually the zone you need for price turnaround in the zone. Once price goes a pip, I mean, if I see price wick higher than my A, I don't consider this pattern valid anymore. Even though a lot of times they still play out, I don't consider this pattern valid anymore though. I keep double doing everything, don't I? So let me copy this. I'm going to go fib A. Oh, I'm stupid for that. Fib A to B. That's how you get C. C is minimum 618. And the highs you can go to 1. If price wicks past 1, I'm not taking that. But this is my zone. And you see price came perfectly to 886, like perfectly 886. So now my last fib is my first fib, which is going X to A. Well, actually, not my last fib, next to last fib, going X to A. Now you see that my entry zone on here, which is my 786 to 1 off my Gartley. But what you do is you take that first fib, looking for like that 886 entry. But then you're taking your next fib, you're going B. Oh, my bad. You're going B to capital C. This is your C right here now. Now, your next fib is going B to this capital C. That's pretty convoluted. But what you're looking for is this 1272 area. You see right here in blue. That's why I color coordinated for. So my key zone is 1272 to this 886 right here. That's like my ideal entry zone. That box is pretty big because how this one is lined up. But you guys will see how price played out. So my pattern is X to A to B, B to C, C to my D in this general area. I have my D drawn right at 886 because it touched a diagonal trend line right there. But you saw that price came down to this level of support, which is fine. This drawdown on this is very minimal. So let me play this bad boy out. So when price went down there, it pushed a little bit lower. That's still fine. You're not freaking out. I caught all this right here up here. from here to there, which was 90 pips. I caught 90 pips on that, or like a 10 pip drawdown. Now, I wish I knew Trump was going to tweet, because I would have caught all this, which would have been, get out of the way, which would have been 580 pips. Now, again, I wish I knew he was going to tweet. I would have caught that 580 pip move in comparison to that 90 pip move. 90 pips is great, but still, I would prefer that 500 pip move over that 90 pip move. Now, before I hop off here, do you guys have any questions? Keep letting this play out. And that's it. So if you guys don't have any questions, I don't see the chat box moving at all. If you guys don't have any questions, yeah, definitely practice that, man. And you see, just look at this zone real quick. Just look across here. Look how price in this zone has just been stopping. This is your resistance over here. Your resistance. And this is your support. Like, price came right back around to support and resistance. See how that works? This is your support now. Same zone, resistance to the left, support to the right. And vice versa, that happens a lot. But if you guys don't have any other questions, I'm going to hop off. That's the end of this call. And this will be uploaded on my YouTube channel, which I would drop you guys that also in yeah, or matter of fact, Ray get it to y'all. I'll give Ray the link once it's uploaded, and he'll get it to y'all. But hey, y'all have a good one though, man.